Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves just one question: what happened today? What might it tell us about the coming ones? We do the show 4 times a week, every Monday through Thursday. Broadcasted at it before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little as far as what happened today. Markets down. They were down bigger than this. Ended up not quite as bad as it looked like it was going to be. Recovered after the European markets finally closed. Down about 1.25% this morning. Russell was the leader on the way back, down 0.3. At the worst, it was down over 1%. And, pretty red on the indexes themselves. Agriculture index down. Gold was up. Dollar was weaker. Not that much, but weaker. We had bonds selling off of a nice big gain. They really couldn't hold their price. And so you kind of got a mixed bag here. We also saw in the bond space, junk bonds got hit pretty hard, corporate bonds as well. So that still looks like damaged goods at this point. As far as the markets and what they're up to, let's start here with the S&P 500. So as you can see, they press them down again this morning. Now they didn't get to the lows from last week, but they got pretty close. So they pushed down there. They're pushing at 30.6. The number down there was 30.3. These numbers back here are 37 and 36. So as you can see, you're coming down there. You're doing less volume. This looks like it's going to try to bounce right back out of here. So you kind of do a hammer reversal today. It's not really based on anything, so I can't put much weight on it. Didn't get to the lows, even though volume was a little heavier. That's kind of discounted by the fact that you didn't set new lows. And if I go over to the Dow, and I don't look at the Dow that much, but if I look at the Dow tonight, the Dow gets under that low. It was doing 905 there, it does 919, but what it's going into is 1 and going into 1.3. So, as it gets down here to these swing point lows, it's not doing as much volume, reverses. This also looks like it's going to try to climb back up again. Nasdaq. If we look at the Nasdaq, so the Nasdaq comes down, does the same sort of thing as the S&P 500. Remember, this was kind of a doji reversal, almost a hammer reversal, although they gave it up right at the end of the day last week. You should not trade underneath that, and they did not today. So in my mind, on the indexes, that's a positive. It's a positive here on the index as well. And finally, if I move over to the Russell, which has been the strongest of late, you actually did get the hammer reversal here. Goes down, flips around, closes almost back to even. Got pretty close, and actually was even at one point today. Excuse me, not even, back into the prior bar's low. And nice recovery. I can't stress enough how, shall we say, resilient these markets are. They just don't want to give it up. We got the Fed meeting on Wednesday. All of this pressure again today was off of what was happening in Europe. So let's go over to the European markets next and take a look at how they're doing. We'll start with France. France is pushing down towards the lows. Hasn't gotten to the lows, isn't doing the volume either as it gets there, but it really matters when it gets there, if it gets there. So France, off the Greek news. Greek broke off the talks again on Sunday without any kind of resolution. There's meetings tomorrow with respect to the commissioners. So, tomorrow there's more news events. We'll see what the news flow looks like tomorrow. This is coming back, trying to test back into the lows and basically trying to regenerate off that prior swing point low. So the way that works, in case you're new tonight and haven't watched me before, is when you break under a low, which is what we did on this bar, and you come back to test it, the idea is that when you come to test the high of the low, because you came within 6 bars, that is the test. That's the bearish retest, regenerate And what we're saying is that as it comes down, what it's trying to do is it's testing back on the back side of that, the top, and trying to regenerate lower, and that's how you get your ABCD structures to the downside. So this is at risk of doing that. Again, the volumes were shrinking today, not expanding. So it's not clear that it's actually going to be able to break. But again, the test is at the low if in fact it gets to the low. If we look at the DAX, now the DAX has been the weakest of the two. DAX looks about the same, doing exactly the same thing. Swing point low was here, that high of the low was there, came into it, regenerating back to the downside. If you break lower, you've got an ABCD structure to take you down. Not that much lower actually. I mean the difference between this high is 11,515 and this high is 11,455. So you know you're only talking 50 points. So 50 points below this low would be around what, 108.14 or so. That number that it's been trying to get into is 107. So it'd still be 100 points above where eventually you know, if it's going to trade lower, it looks like it eventually would trade lower to that price point. Toronto got under, back over, actually had a lighter volume. That looks to be 156. Yeah, lighter volume. That looks to be a reversal there. If we look over to Shanghai, Shanghai did not make a new high, was underneath it. Volume expanded slightly, coming back. This is going to try to test back into the top of this breakdown bar, it looks like, and this doji reversal. So that price point, 49.85. We're trading at 50.62. I suspect they'll trade into that tonight, and then that will give us some indication of if that's going to hold or if it's going to start range trading. Hong Kong, the Hang Seng comes down, bounces, now coming back. Again, this is the same idea. Retest, regen, you break swing point lows, you go back, try to get over the highs of the lows, and if you look at those two, what did it do? It got into it, and now it's trying to regenerate lower. Now, if it does regenerate lower, the ABCD structure here is a little bit steeper, can actually take it back into this bar and close that gap. So if we're looking at the Hong Kong market, there is the potential for this to trade down a decent amount still from the current price point. I suspect that's really going to depend on what happens in the Shanghai index. Elsewhere, not a lot else to talk about, but as you can see, I will pull up the Nikkei. As you can see, you know, these markets still do not want to give it up. So when we're looking at the majors are holding on for the most part. I think the Shanghai index is really kind of the key tonight in Asia. And then the key tomorrow, of course, is whatever the news flow is in Europe with respect to those lows and whether they're going to hold them or not. And right now, it really is news flow. It's news flow off of Greece, and it's news flow, or will be news flow tomorrow, off of the Fed. The Fed has its meeting starting tomorrow, and well, actually, it won't be tomorrow. It'll be Wednesday that the news flow, the meeting concludes, and then we have a press conference afterwards. Let's look at the currency markets, because currencies have a lot to do with this too. For whatever reason, this euro is holding. And it's kind of interesting that it's holding at these highs, even with the Greek issues, and of course with the U.S. supposedly going to tighten. You would think this would try to trade down, but no, it's not. It's holding. If we look at the Japanese currency, it's also holding. And then, of course, if we go over and look at the dollar's holding down towards the bottom of its range. So right now, it looks to me like this dollar is going to try to trade to the bottom of the range. I don't know if that's telling me, you know, Yellen is going to be more dovish than people are thinking, or if she's going to somehow reiterate in some other way that, yeah, we're going to raise rates, but we're going to keep them low. I don't know what the magic words are going to be, but right now this dollar looks like it's going to try to trade to the bottom of the range again, and we talked about that last night. That bottom down here is about 24.43, so that would be the number it's going to try to go after if in fact it trades down there. And let's see, anything else of importance? Oh, gold. For the weakness in the dollar, of course, that helps the metals, helps most commodities. Gold pushes up, has slightly less volume than this high last week. That was 114.14, trades to 114.15. So it goes over. Volumes over here were 5.4. Volumes today were 5.0. So you actually go over, back under, a little bit less volume. It's close enough to where it can test it again. But what's really happening is not so much this bar, it's really this bar that's being tested. See the volume on that bar? Also see that that's the high. You're testing into the low of the high and you can't hold into it. Gold has to get into this bar and hold into it. If it does, it's going to go test the top. That's your signal tomorrow if you're going to get that trade, or Wednesday. Gold has to get into here and hold. If it does, then you can get the run up to there. And if that's the case, you can trade gold. You can trade gold indexes, not indexes, but the sector stocks themselves. GDX, for example. That's the trade. When I was coming on, I was talking about junk bonds. Starting to break down. I don't know that this is a huge worry yet, but this is another ABCD structure to the downside. And if we look at it on the weekly, it is deep enough into this high volume low to where it looks to me like it's going to try to trade down there. You got the break last week, 2 swing point lows it broke on this time frame, right? That's the break there. Presses with volume. This looks like it's going to try to make it all the way down to the zone down here now. So I suspect junk bonds are going to trade quite a bit lower from this price point. That got me to thinking about the higher grade corporate bonds, right? Because bonds themselves are having such a hard time. And when I looked at those guys, they're doing a little bit better, not nearly as bad. And you look at them on the weekly, they had already broken multiple swing points as well. Here, extends down 2 to 3 bars usually when you get that kind of multiple time frame break with multiple swing points. I would think that the fact that this went over, this is going to be a sideways week at worst, and this is probably going to get a bounce afterwards. So that one doesn't look too bad. If I go look at the long-term treasuries themselves, the 20-plus year bonds, you had to push down, right? You came back an immediate retest and then regenerate, but now here you are, you're back up there. This is the second test. If this can stick in here, I think it can make a run back up to that swing point high. It's kind of an important place because you're still playing with that October lows, the October highs, the spike highs. That low of that high has volume. You got under it, you're still trying to hang around it. That number's 120.05, still trading underneath at 118. To get back into that bar allows one to trade quite a bit higher potentially. So this is, these next weeks, 2-3 weeks, whatever it is, are going to be kind of important to see if but if the bonds can actually flip around. Last week, it was an under, back over, kind of a doji reversal. This week, you really want to see it stay above at the close. You want to see it stay above the low of this bar, which is 117.20. If it does that, I think it might be able to get a bounce. Why are these important? It's like the currencies. Bonds and currencies are a big part of what's moving these markets right now. And so you really have to keep your eye on what they're doing. Moving to the other end of that curve, if we go to the SHI, which is the 1 to 3 year, you can see it also is under swing point lows, 2 of them on this time frame. If we move it to the weekly, not nearly as bad. So what you're seeing is the long end of the curve, the bond or the yields going up, whereas the short end of the curve, they're not. So that's steepening in that curve to the long side. And of course, that is what is helping the financials. If we go back to a theme that we've been looking at for a while now, and if I can pull it up here, the major sectors, and pull up the financials, you can see how they are hanging up here at the highs. Under, back over today, less volume. This sector looks like it wants to try to push higher. On the flip side, one that's looking a lot weaker right now is the industrials. They push down with volume again. This is getting close to breaking on multiple time frames. And if we think about multiple time frame breaks and we go over to our resources, and let me see if I'm logged in here. No, let me log in right quick. Here we go. And if we pull this up now to the resources, market trends, and pull this up, what I wanted to show you was here you have, you don't have that many that have broken so far. And if they start to break on this time frame, we could see a lot more breakage to come. So the discretionary, the energy, those are the ones that are broken so far, and of course utilities are already bearish. So we have trend transitions here. We have a lot of transitions over here, right? Look at all the bearish ones here. Almost all of these are either bearish or sideways. The only one that's bullish right now on the short-term time frame is the discretionary and the one we were just talking about, the financials. So it's a tug of war. You have a lot of weak internals going on. The longer this continues, bearish and sideways, and maybe even sideways going to bearish, which is what we were just talking about with the industrials, you could get a bearish trend here and a sideways there. That would make 1, 2, 3 sideways, 1 bearish. That's almost a majority. As these start to roll over, the odds are most of them will roll over, just like you saw here. If this goes on long enough, then you start to see some problems out here. Right now, the only one bearish is energy. The question is will we see more in the long term? And if you do that, then you're starting to set up some real problems. But right now, we're not there. It takes time. Time is what does it, right? Short term feeds into the intermediate term, which eventually feeds into the long term if they last long enough. That's why you usually see, if we go back to the charts, and let me pull up the S&P 500 to kind of conclude all of this. If we go back here to the S&P 500 and you look at it, this is 3 months of nothing. And what I mean by that is you've been zigzagging in here now for 3 months. Can't make any progress. If you pull this over to the weekly, what is that doing? Well, the longer you go, the more flattening you get at the top, right? It flattens out. What does that do? That allows swing points to collect and be close to wherever price is. Which means what? Which means you can start to break them. If you start to break them, what does that do? Well, that changes trend over here. That's how these trends get transitioned. They're telling you as they start to transition that more and more the internals are getting weaker and you're getting that transition to take place. So, we're rapidly reaching a point where this market's going to have to do one thing or the other. In other words, it's going to have to give it up, and we're going to get transitions here on this time frame, or we're going to see these start to flip back around and gain strength and this market push higher. Which is it going to be? Well, that's jury's still out on that, but if you ask me what I think, I think that you're going to get a setback here at some point. And I've said that for a while. So far it hasn't done it. But as I've said before, these things take time. And I suspect, there's a decent chance somewhere over the next 2, 3, maybe 4 months, we're going to get a sizable correction, one that's going to scare the pants off of people. How it will come about, what will do it, maybe it's the Greek question. Maybe it's the Fed raising rates. Maybe it's, maybe it's a lot of things. I don't really care what it is. I just care that we're on the right side of it when it hits. That's why we keep our ear to the ground and we keep looking at these neoclassical signals as they give them to us. That's it for tonight. As far as tomorrow, I think you got a little bounce coming. Nothing big, but it does look like it's going to try to bounce tomorrow. And that will set up a trade into the Fed meeting. And, maybe there's news flow out of Greece, the Greek question that gives it the push tomorrow. It just looks like for whatever reason, it's setting up to try to do that. Dollar looks like it wants to press down a little bit more. It's probably going to help the gold market as well. Folks, have yourself a great night. Thanks for joining me. Have a good one. I'll see you next time. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great one. I'll see you tomorrow.